G'day guys, Seeney here and welcome to another episode on the Australian Wealth Channel. And in this episode, we're talking about what the Australian housing market did this month. So thank you guys so much for watching. Please make sure you like and subscribe to the channel. Really helps to get this video out to more people. So we've just had the data come out from the last month from CoreLogic, and it's pretty much what we expected. The housing market just continues to roll on. In the last 24 months, real estate and stocks have both been incredibly well-performing assets. But in this particular video, we need to talk about Australia's housing market because it has just gone bonkers to a number of different factors, and we can put that down to people not spending money overseas on holidays, choosing to put their money into the property market here. On top of that, we have record low interest rates, and of course, we have a lot of government support and money being thrown into the system. So as a result, it's really pumped up property prices over the last 12 to 24 months, and that is continuing. So I just wanted to go through some of the growth figures in each of the cities, so then you can see how crazy things are actually getting. So what we saw in the last month is housing values across the nation go up 1.49% just in the last month. So while you might see some news articles and headlines saying that the property boom is over and that, the momentum's being taken out, whilst the growth rate might be a little bit slower than it has been, it's not around that 2.3, 2.6 figure or higher, 1.49 is actually still an incredibly fast growth rate. So even knowing we are seeing some slowing across the entire market, 1.49% in 1 month is a fantastic result if you're a homeowner. So this is actually really similar to the September results. In September, across the nation, we saw an increase of 1.51%. So it's 1.49, so it's 0.02% lower. But of course, that growth rate is still remaining very, very strong. But of course, as we know, the Australian housing market is not just one market. Even though we've seen a lot of growth across the board, things happen in different places at different times, so it's worth breaking down the figures across all capital cities. So let's start with the outlier. Now, over in Perth, we've actually seen negative growth this particular month of 0.1%. So housing values have actually gone down in Perth, which is just crazy. This actually hasn't happened since June last year. So if you're in Perth, maybe the property boom is over. Having said that though, in every other capital city, we've seen gains, and not just little gains, big gains. In fact, the highest growing capital city in all of Australia was in fact Brisbane this month, with growth of 2.54%. So that is a huge gain in 1 month. That's kind of some of the gains that we've seen in the last few months. But Brisbane, there's still a lot of demand for property up there, and I'm very thankful for that, owning an investment property in Brisbane myself. Hobart, one of the best performing markets, also is up another 2%. A fantastic result for any homeowners down in Hobart. And Adelaide is also up 2%. So we've seen some big gains in some of the smaller capital cities around Australia. In Sydney, we've seen growth this month of 1.5%, which is also a great result. And in Melbourne, we saw 0.99%. So we're still growing there as well, even amongst all of the crazy lockdowns. So there's a number of different catalysts, which is meaning that the growth rate in Australian property is actually slowing down. And some of those reasons are that affordability is getting more stretched. Anyone that has had a look at the market in the last little while knows that it is very expensive to buy a house. So as things become more unaffordable, it's hard for that price to keep growing. And on top of that, we also have a number of different factors which have contributed to that, including rising supply. Now that lockdowns, especially in Sydney and Melbourne, are over, there's a lot more listings that have come back on the market. So what that means is that there's more properties for sale, which means more people can get what they're after, which means less competition in the market. And on top of that, we also have to factor in the fact that there's less stimulus going into the economy. The Commonwealth has pulled back their support for people that have been in lockdown. The New South Wales government has pulled back on their support for people that have been in lockdown. So there's less money getting flooded into the system, which means less growth. Something else worth noting is that the Reserve Bank has kept their cash rate at the same level. Now, a lot of people have talked about interest rates going up. I personally feel we're a little bit off that, purely because there's so many businesses that have taken out loans during this time, and we don't want to go too early in rising interest rates there, because it means a lot of businesses will struggle, because it is all connected. Real estate, businesses, all those things are connected, so it's very much a balancing act. We don't want inflation to get away from us too much, but we also don't want to send businesses bankrupt. We want to make sure people can still afford houses. We don't want them to run away too much, but of course we don't want to crash the economy as well. So it's a very difficult job for Phil Lowe over there at the Reserve Bank. On top of this, we also have the tightening of credit as of the 1st of November. So it's going to be very interesting to see what effect this has on the housing market in the coming months. Basically, if you have a really high debt to income ratio, then it's going to be a lot harder for you to borrow money. About a 5% drop in your borrowing power based on this change from APRA, just to make sure the housing market just doesn't keep going too crazy. Once again, it is the regional markets that are still outpacing the capital cities. We've actually seen regional growth year over year of about 24%, whereas we've seen capital cities around 20% across the board. So the regions are still growing quite fast, and quite a bit faster than the capital cities. However, it looks like this change might start to reverse just a little bit now that the entire country is out of lockdown, and we're going to be a lot more free to do what we want. So where is the property market going to go from here? Now, personally, I believe over the next few months, we're going to continue to see the property market go up. We might not see it go up as much as we have back a little bit earlier this year, but there's no catalyst for this to slow down. There's still a lot of demand, and even knowing there is some rising supply, there is still a lot of competition to get properties Australia-wide. So I'd really like to know what you guys think about the Australian property market. Are we going to see it go up even more? Are we going to see it bust? I'd be keen to know your thoughts in the comments. So please make sure you like and subscribe to the channel. It really helps to get these videos out to more people. If you'd like to get into the stock market, I have a link to Stake. And once you deposit money in your brokerage, you'll get yourself a free stock, which is great. And if you'd like to track your net worth, I also have a link to WeMoney. Just for signing up with WeMoney, you'll get yourself $5. So it's a pretty great deal there. So thanks so much for watching. Please make sure you like and subscribe. My name is Seeney, and we'll see you later.